Welcome, friends, once again to the lecture on financial services. Today, we are going to talk about again the ecosystem of financial system. Now, why we are going to talk about ecosystem of financial system is because it is very much, this ecosystem is very much related with the economy. Now, what comprises of economy? We have been hearing time and again, every now and then, from different sources, that economy is a system. It's a system wherein production, distribution, and consumption, these three important activities are carried out. Right? Are carried out. Now, economy is a system where production, distribution, and consumption of goods and services is carried out. Now, to run this system, you need financial system. Now, what comprises of financial system? If you see very closely, we have five aspects in financial system. One is financial institutions, the other is financial markets, right? The third is we are talking about here in this case financial instruments, right? Talking about one sec, I think financial instruments, then financial regulators, right? And ultimately financial services. Now, why aren't we coming straight to the point of financial services, or why not we are coming to the point of or the subject matter, that is financial institutions, straight away? Now, there is one hitch over here. Why we are not coming back straight away to that, or financial services, subject matter for that. Now, as we said, that financial services, for that matter, is part of an ecosystem. That ecosystem comprises of financial institutions, right? Financial markets, financial instruments, financial regulators, and financial services. Now, you need these all five aspects to form what? To form a financial system. Now, when these five things, they form a part of our financial system, that is the reason why we are studying so closely and so affirmatively about these things, right? So, without understanding the ecosystem of financial services or financial system, for that matter, when we know that these five things, they comprise of the financial system, so we need to be very clear about it, why we are studying what we are studying. So before we go deep into the financial services, let us try to understand what comprises of financial institutions. Financial institutions comprise of three things: financial intermediaries, non-financial intermediaries, and others. Now, why, for that matter, we are talking so vividly about financial institutions is because many a times students ask, where are we going to get jobs? See, you can get jobs either in financial institutions, financial markets, financial instruments, financial regulators, or financial services. That is the simple reason why we are trying to understand the whole financial system as a part of our study of the subject financial services. We'll be coming back to that. Now, coming back to financial institutions per se, it comprises of financial intermediaries, non-financial intermediaries, and others. Now, what do you mean by financial intermediaries? Let's see over here. What does it comprise of? Right? What does it comprise of? See, financial intermediary is an institution or a person that acts as a link between two parties of a financial transaction, right? For every financial transaction, what is needed is a financial intermediary. The parties could be a bank, a mutual fund, where typically one is the lender and the other is the borrower. Now, how do they work? Examples range from banks, credit unions, insurance companies, mutual fund companies, stock exchanges, building societies, etc. Now, if you see very closely, we keep on hearing these words, right? Banks, credit unions, insurance companies, mutual fund companies, stock exchanges, building societies. Here lies the potential of having a job. Say, for example, you can work in a bank, or you can work in a credit union, or an insurance company, mutual fund companies, stock exchanges, building societies. The possibilities are endless, only with respect to one subject, that is financial services. Even otherwise, we can also have jobs in NBFCs, non-banking finance company. These are those institutions which are finance companies, but they don't function in the form of a regular bank. Right? Now, what comprises of financial intermediary? I'll be sharing this with you definitely. But before that, let us try to understand what are the advantages of financial intermediaries. They provide a convenient means to investors and borrowers who are not experts but require to partake in financial transaction. It's a convenient means where a person who is in need of money can get the money from the person who has surplus money. Now, what else do the financial intermediaries do? Analyzing and interpreting risk and reward for the investor. Now, since they are working in huge quantum, what happens? Cost is lowered, the cost of borrowing and cost of investing is lowered. And because they act as intermediaries, they spread the risk. That risk is not concentrated in one single person. So these are some of the advantages of financial intermediaries. Now, in financial intermediaries also, if you see, we have two types of intermediaries, that is banking intermediary and non-banking financial intermediaries. Now, let's again come back to what exactly do we mean to say by financial intermediaries and non-financial intermediaries for that matter. So before we try to understand, right? Before we try to understand what is a financial intermediary and what is non-financial intermediary, or for that matter, banking intermediary and non-banking intermediary. Banking intermediary, it creates credit, Whereas non-banking intermediary, what happens? It provides, extends, or supplies credit. It's not a creator of credit. Now, banking intermediaries generally are concerned with liquid form, that is in money market, whereas non-banking intermediary is concerned in capital market. Credit that is extended to the borrower. Here, the borrower is an individual for short term and medium term. Here it is provided medium and long term credit to trade, industry, and commerce, that is not individuals, to the business, trade, industry, and commerce. Here, the deposits are in the form of savings, demand deposits, and fixed deposits, right? Here they are fixed and term deposits. Banking intermediaries operate in organized or regulated form. They are governed by regulations. Non-banking intermediaries are both organized in an organized sector. Deposits can be withdrawn, right? Deposits here cannot be withdrawn. Example here is SBI, and here it is GIC of India. So that is the difference between banking intermediary and non-banking intermediary. Now let's move on to non-financial intermediaries. Non-financial intermediaries does not work as a medium, between fund providers and fund seekers, for that matter. What do they do generally? They generally actively take part in the business. How? They straight away invest in that particular sector. Now, classic example is IFCI, that is Industrial Financial Corporation of India. Now, what are the activities that are included in here? Like I said, direct investments in shares and debentures of corporate companies that they actively take part, right? Actively. Also, they assist in the process of industrial and economic development. That is, put it simply, they have non-financial intermediaries have a larger part in the industrial and economic development of the country. And credit that is extended generally is long term. It's not for, say, 1 year, 2 years, 5 years, but more than that. And they also extend technical assistance and assist in formulation of new projects. See, this is the reason, simply the reason why I'm trying to put before you all these aspects of financial system so that you can have a very clear understanding about where we can have jobs for that matter. Now, other financial intermediaries, a classic example can be Export Credit Guarantee Corporation of India. Now, what does it do? It helps, right? It helps various financial intermediaries, right? It helps various financial intermediaries so that an atmosphere is created. See? Now, what do you mean by atmosphere? Here, atmosphere we mean to say by an ecosystem. Now, how it is created? Say, for example, ECGC, that is Export Credit Guarantee Corporation of India. What does it do? It facilitates or it promotes exports. Now, how do you export? Exports are done by opening letter of credit, LOCs, right? Letter of credit by the person who is exporting in the bank of the exporter, and that bank, it asks for guarantee payment or payment guarantee from the person who is importing through their own bank. This mechanism is governed by ECGC. So, this is one form of financial intermediary which facilitates what? It facilitates business to expand through exports, right? So till here, I think we are clear about what exactly we mean to say by financial institutions per se. Now, let us try to understand what exactly comprises of financial markets. Now, financial markets are classified on the basis of what? On the basis of nature of securities. Nature. You see? Nature of securities. On the basis of period of maturity and on the basis of nature of transaction. Right? There are three possibilities wherein we are trying to understand financial markets per se. Now, again, here also, if you see very closely, we are talking about financial market on the basis of nature of securities. It's again divided into primary market and secondary market. On the basis of period of maturity, money market and capital market. On the basis of nature of transaction, organized and unorganized. So put it simply, if you see very closely, we'll try to understand what exactly do we mean to say by the nature of markets, right? What type of markets do they exist? If you talk about primary markets per se, they deal with claims or securities, also known as new issues markets. Now, Financial claims or securities, put it simply in our common language, we mean to say by shares. They primarily operate, primary market generally operates in creation of new shares or existing shares. Existing shares are dealt with in secondary markets per se, right? Here, primary market deals with new issues market. What is the spirit behind that? They supply additional capital, right? Capital is raised and it is provided from primary markets. And what exactly do secondary markets do? They deal with already existing securities, right? Already existing securities. They don't directly partake in providing additional capital but can provide liquidity to old or existing securities. Secondary markets can be in the form of, like, say again, investment banks, right? Here we can call them as investment banks, wherein money is directly not raised in the form of capital, but you provide support, financial assistance to the already existing securities. They do provide uh, liquidity to convert the shares into money, right? On the basis of period of maturity, here we are talking in terms of money market. This is a type of market which trade in securities which has a short maturity period of less than 1 year. They are often risk free. Now, what are the forms of money market? Treasury bills, right, issued by the governments, certificate of deposits, wherein the on the deposit it is stated that if you put some money for less than 1 year, you'll get back this much of money. That is what we call it as certificate of deposits. Commercial papers, these are generally issued by companies to one another to raise capital, right? Now, what are capital markets? Capital markets, how do they function? Indian households have small savings. On the other hand, corporate need funds to meet the capital requirements. Now, if any household, if he wants to invest in business, it can be done through security market. How? By buying stocks, bonds from capital market, right? Like if I want to partake in, I cannot partake in the day-to-day operations of big companies, but still I want to be a minuscule owner, very small, in a very small percentage, to be the owner of a certain company. I can invest in that company by buying stocks, right? Or by buying bonds, right? So again, this capital market can be divided into primary market and secondary market. Now, it's the same like we had studied earlier, primary market and the secondary market. Its primary market is also called as new issue market. Secondary market is a market wherein you trade in already issued shares. Now, financial institutions are again divided into, can be categorized on the basis of nature of transaction. On the basis of nature of transaction, it is categorized in organized financial market and unorganized financial market. Now, here you have a lot of things that you can understand. Transaction are as per defined rules. Participants are central bank. Central bank means here, in our case, it is RBI, right? Commercial banks, development institutions, etc. Unorganized financial market without any market norms. Money lenders, participants are money lenders, indigenous bankers, that is, those who operate without any market norms, and chit funds, right? This organized financial market, it has a positive role in economic development, whereas unorganized financial market has no role, or rather, it hinders. It acts as a speed breaker in economic development. So, this is what we have tried to understand by financial markets. Now, coming back over here, we will be talking about financial instruments, right? Financial instruments, they are again categorized into three types, that is short term, medium term, and long term. These are financial instruments, they are categorized based on the term, that is dealing with time. Examples can be 164 days treasury bill, right, of short term, that is less than 1 year. Certificates of deposits, 1 to 5 years. Long terms, more than 5 years, that's long term bonds. Now, if you really want to understand what exactly are comprised of financial instruments, like we have talked about, they are different from one another. They are categorized from one another based on, say, for example, based on the maturity period, transaction cost, marketability, and liquidity. Now, what do you mean by marketability? Marketability is that how fast you can sell, or the saleability, right? This means the saleability of an instrument or a security. See, the simple reason why I'm trying to make you understand all these words is because many times we are confused that why so and so word is being used for so and so thing, why sometimes things are called as securities, why they are called as instruments, why they are called as markets, or so on and so forth, or what exactly comprise of, what do you mean by short term, what do you mean by long term, or medium term or long term. So this is, we need to be very acclimatized. We should be aware of the words that are used in financial services. Once we are aware and use those terms in our daily lives, we can get a very clear understanding about what exactly comprises of financial services and where we can get the jobs. Most of the time, since we're not aware of the terms that are used, we don't approach those institutions or those markets, or we don't go into those areas where we have ample opportunities to the jobs that we can get. Now, moving on, let's see what is the further aspects. These all financial instruments, financial markets, and financial types, they're all governed by financial regulators. Financial regulators. If you see very closely, these are governed by whom? By financial regulators. Who are financial regulators over here? Financial regulators here in this case, they comprise of what? They comprise of RBI, they comprise of SEBI, that is Stock Exchange Board of India, IRDI dealing with insurance, PFRDA dealing with pensions, right? FMC Forward Markets Commission, that is dealing with options and futures. RBI, it is a central governing authority, central banking authority for the whole of economic system. So it plays a pivotal role. These are what? These are regulators. These are regulators, right? They regulate the functioning of financial instruments, financial institutions per se, and financial markets in particular. So these are all being regulated. If you don't, these are regulators. See, the word that is important here is regulators. They regulate, right? Regulators help in smoothing out the process of working of an institutions. That's why they call as regulators. So this is the area also wherein you can get job opportunities. Either you can work in RBI, you can work in SEBI, IRDI. Of course, these regulators, they have their own set of examinations. If you clear them, you can still work. You can also dream of working in RBI, SEBI, IRDI, PFRDA, and FMC. Since we're not aware of our own possibilities, we fail to get jobs in these areas. Okay. Now, what comprise of financial regulators? Here again, we have a very brief understanding. You can go through this, like RBI over here, right? SEBI, we are having very clear understanding about what comprises of SEBI, that is Stock Exchange Board of India. What does it do? The reason why I'm sharing again, I'll be saying this every time now and again, is only because so that you are aware of and you can get jobs in that particular sector. Here also we are talking about IRDI, right? IRDI. Now, what else is PFRDA? If you see PFRDA, that is Pension Fund Regulator and Development Authority. If you just go through, then you can understand these are the areas where you can get jobs, right? Now, Forward Markets Commission, FMC. FMC deals with commodity markets like MCX, UCX, NMCE, right? These are what? These are dealing with futures. Futures means what exactly is going to be the value of a commodity in future. So therein you can speculate and you can invest. And also it also is included in one more word we can come across is the options market. Options, whether you want to stay invested for 1 year or whether you want to stay invested in a certain category of a financial product. So you can get invested in that. See, all in all, this whole exercise, if you remember back, if you remember the definition of financial management for that matter, right? Financial matter was generally dealing with risk minimization and return maximization. This is the central idea behind all this thing, right? This is a central idea. Within that central idea, we are talking about the different avenues, the different options that we have, wherein we can talk about minimizing risk and maximizing returns. For example, if you're talking about how to raise money, it is also important to know from where to raise the money. If you want to raise money, then again we'll have to talk about financial markets, financial institutions, financial instrument types. So that is the reason why we are trying to understand this. One more, regulatory authorities, National Stock Exchange of India. Likewise, we have a lot of institutions working for that. Again, we have more importantly a Foreign Investment Promotion Board, wherein it promotes investments through foreign channels, right? So, lot of opportunities. Since we are not aware of it, right? We can also get jobs in foreign exchange markets, right? We can also get jobs over there. Now, that is the simple reason, like I have been time and again telling you, so that you are aware of where to get the jobs. Now, moving lastly to the most, coming to the subject part, what exactly is our subject? Our subject is dealing with financial services. Financial services, they are either fund based or fee based. Now, what do you mean by that? Let's come back and try to understand that. Here, I have also put forth before you the growth story of financial services in India, right? And if you see, I have also talked about financial services, that one simple part you have in your syllabus. Also, we'll be talking about financial services in detail later on in our next lecture. What exactly comprise of financial services for that matter. So, friends, I think this was the whole idea behind sharing the concept of financial system. To have a brief recap, we started with economy system, then moving on to financial system. For that matter, financial system comprises of financial institutions, financial markets, financial instruments, financial regulators, and financial services. Without understanding this whole perspective, right, it wouldn't have been possible for us to understand this whole thing. So, to understand financial services, I have tried to give you a brief summary or idea about what exactly comprises of financials. If I had taught you only about financial services like fund based or fee based, that we could have understood only what exactly comprises of financial services, but we need to understand the ecosystem of financial services, how it operates, right? So that is the reason why it's taken so long for us to understand. Hope you have got what I have tried to explain to you. That's all for now. Thank you.